Welcome back. Decent first half, at least for the market, so it seems. We're retaining most of the gains, and you've got a good sort of bunch of large stocks which are keeping things higher this afternoon, almost touching the afternoon. Infosys, TCS, for instance, Reliance, quite a few of those stocks are still holding very well, as is ITC. That one continues to march ahead. Well, with that, let's actually turn our focus to our next conversation. And it is a more market-specific conversation. Amit Khurana, Head of Equities at Dolat Capital, is with us to talk about the fundamentals and the road ahead. Amit, great to be speaking with you after a while. Good to be catching up. So you tell us, I mean, it's been a little bit of a tough start to 2023 for investors. We haven't had a runaway wild rally. We've been underperforming a lot of the other markets around Asia in specific. What's the course looking like to you from here on?
Thank you. Good to see you back, Surabhi. Glad to be here. We put out a note in November where we called the first half of 2023 more of a bottoms-up story, and as a best-case scenario, a flattish kind of a return on the Nifty and the main board indices, so to say, for India specifically. So just to put it in context, India outperformed by a huge margin last year. So I guess some normalization was in order, which we are probably going through right now. When you look at the big drivers on the macro side, I think they continue to be, shall I say, dichotomous. Why? Because inflation comes off a little bit, then it goes up. So that's very, very difficult to make a call as to what the terminal rate for interest rates will be. But we still maintain that we're probably in the final one round or possibly done away with it. I think that's a big direction that the market is looking out for. And then, of course, the earnings trajectory, which has been slightly, shall I say, lower than what we would have thought for the quarter. So we had more downgrades than upgrades in the earnings season, which is just getting over today. And I guess market is looking for more directional clarity as to how the FY24 earnings will look out for. So ballpark, I think the scenario does not change from what we have seen in the first 6 weeks of this calendar year. I think this will continue to be the situation at least till the time we get Q4 out, which is April, May. And hopefully by that time, we will have much better clarity on how the global macros work out. But having said that, I think the sector-specific, stock-specific opportunities continue to be pretty attractive, and that is where our bigger part of the focus is in our client conversations.
Okay. Hi, Amit. Thanks for joining us. So you said, sector-specific, stock-specific opportunities continue to be there. Is there anything new that you've identified? Because the last time we spoke, you said you like banks, you like IT, and you like capital goods, and you would avoid metals, chemicals, and autos. Does that still hold, or have you made any change to this kind of sector preference?
Well, largely it holds. I think we've also started looking at Elco far more constructively, because a lot of local level, state level issues have started getting resolved in terms of price hikes playing out. So that's one category which we believe structurally extremely bullish. And with this price hikes, FY24 visibility only gets stronger. So that's one new category which I may like to highlight. And then, of course, you have specific cases within IT services also. For example, RateGain is one of the names that we've started, getting very positive about, in the sense that the margin trajectory is now, as per the management guidance, showing an upward trajectory. So that is another one that we like. And as a category, I think over the next couple of quarters, you will see the domestic consumption plays coming into picture far more actively. So that's something that we are also looking at far more constructively than what was the case, let's say, a couple of quarters back.
Pharma as a sector per se has seen a lot of misses this time in earnings season, and some of the places where we've seen a miss or disappointing earnings has been, say, an Indoco Remedies. That's a stock that Dolat Capital has been recommending. It's one of the stocks on your buy recommendation. What have you made of the pharma earnings? What are the key takeaways, the big trends to take forward into the next couple of quarters, and have you altered your view on any of these stocks?
Well, big picture, I think the pricing pressure has probably worked out far higher than what our initial expectation was. But having said that, we also feel that some of the local exposed domestic focused portfolio companies will probably be in a better position, because the price hikes for India market have started materializing, and hopefully that should be a tailwind as we speak. So overall, our take on pharma continues to be extremely constructive, and a very, very attractive valuation. Some of the companies now reporting early 20s kind of valuations and ROEs which are high teens. So I think a lot of correction, both time and value-wise, has taken place. While there have been some disappointments for sure, but I think the overall structural play for FY24 and 25 visibility continues to be largely in place as per our understanding, and therefore we continue to be extremely bullish, extremely positive about largely the space in general.
Which are these domestic pharma plays where the valuations are attractive, according to you?
Well, Cipla is one name which is amongst our universe of preferred picks. So that's one specifically. And as you highlighted, Induco as well. Obviously, having said that, there are JB Chemicals is another name that we like because it's a mix of both domestic as well as the outsourcing story. So these are the three specific names that I would like to highlight. Some of them do qualify for our coverage universe as a preferred pick, while others largely remain a buy or an accumulate from our rating perspective.
Got that. Amit, are you, this whole conversation about the path to profitability, are you convinced with what the likes of Paytm are now saying, or maybe PB Fintech? What thoughts here? This has been quite a talking point in the market last couple of days.
Well, we were probably too early convinced, so we did take a bit of a rant on that. But I think that largely the direction for the business has turned out quite constructive, and we started calling that out after the Q2 earnings. But Q3 was very clearly a surprise for everybody, including us. I think the bigger picture is that there's a clear intent on part of the management to highlight what specific steps are being taken to get to the profitability part. And I think the investor expectations have also got significantly redefined. From a scenario of 2021, when anything which was doing concept selling was we could buy it at any valuation. I think those expectations have got significantly realigned to more the reality on the ground. So Paytm is one of the fintechs, one of the digital plays that we feel extremely positive about, and in fact that's the only one which we are actually positive on. Rest of the other players we still find significant challenges to the operating metrics, and therefore we only prefer Paytm at this stage on this particular sort of sector, so to say.
Well, on Paytm, they have a target price of $12.50. Is that right, Amit? So you expect Paytm to double from these levels?
Yeah. So if you look at largely the next 2 to 3 years of trajectory, you could be looking at an EBITDA which would be very, very materially different from what we are looking at here. Obviously, the proof of the pudding is some evidence of that working out and the regulatory environment continuing to stay conducive. And you will eventually see the lending part of the business, the distribution part of the business being a significant driver of the earnings as we project them to be today.
We leave it to that. Amit, thank you very much for joining in. Get into a break. On the other side, the management of Godavari Power and Ispat will be joining in.